Hello, everyone, and welcome to Small Business in the Time of COVID-19. I'm Tony Gagnon, and I've got Dan Hoffman and Alan Heydrich with me. And Dan, in just a minute, is going to do a short presentation on some of the options available to a small business in this difficult time. Couple of things just before we get started. You should have a questions pane on the right-hand side of your webinar tools. If you have any questions, just go ahead and type those in throughout the presentation. And near the end, we'll try to bring those up and have Dan and Alan try to answer things as we can. I know all this stuff has been changing rapidly. It's quite a bit different from what it was on Tuesday and Wednesday, even when we were trying to pull this together. So Dan's going to do his best to walk you through the way things stand today and how we might be able to help you apply for some of the loans and get things pulled together that are needed for those applications. So I think I'm going to turn off my webcam and get it over to the slides, Dan, and I'll let you take over.
Okay, thanks. You got the slides up, Tony? Okay, so the things we're going to go over today, there's actually three items that we're going to talk about. One is the economic injury disaster loans. The other is the payroll protection program. And then another one that not a lot of people have probably heard about is the employee retention credit. So Tony, if you'll just move the slides ahead, we'll start in. Having a little technical difficulty.
Are you not seeing the slides?
I see the first one.
I'm showing the EIDL specifics. Are you not seeing that, Dan?
No, I'm not. Hang on a second here. I can kind of bring it up on my side. So, okay. So the economic injury disaster loan specifics. The declaration of disaster must be made by the state governor to the SBA for the approval process, and that's been done at this point. So loans are available up to $2 million for businesses. The loan interest rates are 3.75% for small businesses, 2.75% for nonprofits. And this is for employers with 500 employees or less. The maximum loan term is up to 30 years, and they determine this on a case-by-case basis. So you must have applicable credit history. You got to be able to show that you're going to be able to repay the loan, and collateral is required on these loans for any amount 25,000 or over. The SBA will accept real estate as collateral, and they can decline the loan. These loans are going to be done directly through the SBA on the SBA website. So this is not one that you would go through a lender on. The first 10,000 of this loan is a forgivable grant. So you can apply for this loan. You don't really have to take all of it. You could take 10,000 and it could be forgiven. Now, the one I think that most people are interested in is the Paycheck Protection Program. So this is for small businesses, loans available up to $10 million. The loan is calculated at 2.5 times your average payroll expense over a 12-month period. This slide says that the loan interest rate is capped at 4%. That's been changed. The interest rate is now 0.5%. The loan term was going to be 10 years, and now they've changed that to 2 years. So this is a really simple form to fill out. Banks, we're kind of having some trouble with this, and I talked to 3 banks this morning. One of them said they haven't got the form yet, and 2 of them have sent me the form, so I know it's out there. But this one you would want to talk to your bank about. You go through the bank on these. These are guaranteed by the SBA, so the bank really doesn't, you're not dealing with them except for them to help you process this loan. So we're kind of curious of what all the documentation would be. And you'll have to excuse me for reading some of this stuff off the paper, but this just came to me about 20 minutes ago from one of the local banks. So they're going to need copies of your payroll tax reports, forms 941, 940, W-2s, W-3, unemployment tax filings for the period January 1st of 2019 through March 31st of 2020. They also will need copies of payroll reports for each payroll period for the preceding 12 months. This loan, if you've got employees or owners that make over $100,000, you can only use the payroll on the first 100,000 for an owner or an employee. They also are going to want documentation of health insurance premiums paid by the company and any retirement plan funding paid by the company. So there's not a huge amount of documentation that goes along with this. These loans do not have to be guaranteed. There's no collateral with them. And one of the things that's interesting about this loan is they have a forgiveness provision on this. So if the loan, let's say you got $50,000, that amount will be forgiven if you're able to maintain the same number of full-time equivalent employees for an 8-week period after the loan originates through June 30th is their measurement date. So for some people, if you don't get the loan till the end of May, it's going to go through June 30th. But you have to keep the same number of full-time equivalent employees as you did have on February 15th. And so they've got some measurement dates there, and it's fairly easy to get the information. I think what you're going to need to do, though, is make sure that if you don't have the same number of employees, are you going to be able to hire them back? Because if you're not, the loan, not all this loan is going to be forgiven. The other stipulation on this, 75% of the loan has to be used for payroll. The other 25% could be used for rent, utilities, health insurance, retirement. So it's not all for payroll, but the large majority, 75%, has to be used for payroll. And so some of the questions we've got have been, well, I only have half the employees that I had, and I don't have the business to bring these other employees back. And I'm not sure if this program is going to make sense for those people unless you can hire the employees back and keep them for this 8-week period. Now, another one that has just come up is called the employee retention credit. And I think this one's going to be more for people that have, an example would be a restaurant has been shut down by the health department because they don't want people coming in and out of the restaurant. Well, they're still allowing them to do carry out. So if they've been shut down by an order, or 50% of their business revenues have gone away because of this, they can apply for the employee retention credit. So what that one is for, you're going to be able to have a credit for any wages that you pay to an employee for this quarter, and it's 50% of the wages not to exceed $5,000 on the credit. So if you had an employee, let's say you're a restaurant, you had 10 employees, all of a sudden you've been shut down, but you can still do carryout. So now you've got 4 employees. You continue to pay them, you can receive this employee retention credit, and it's going to give you basically up to $5,000 per employee for the quarter. Now, if you take this credit, you're not going to be able to use the Paycheck Protection Program credit because they can't overlap. The other thing is that grant that we were talking about on the economic injury disaster loan, that one you can get the $10,000 grant, but that will also reduce the amount of credit if you get the payroll protection loan also. Is that what you understand, Alan?
Yeah, the other thing I would add to that is if you're getting the sick leave credit, that'll also reduce your payroll costs for purposes of the forgiveness of the loan on the PPP loan.
Yeah. So to be eligible for these, you just have to have under 500 employees. The lenders are going to look for some certain items from you, but most of it's just documentation of your payroll. If you get the economic injury disaster loan, that one you're going to have to provide a lot more documentation to the SBA, and you're going to have to be ready to provide collateral. And so personally, I believe that for most folks, first of all, looking at this payroll protection loan, and then if you can get that secured, then if you need additional funding, thinking about what you might need that economic disaster loan for, how you're going to collateralize that, and start getting the information together on that one.
Yeah, just to add a couple things to that, Dan, I think the payroll protection plan is, mainly for keeping employees hired through that 8-week period. And the economic development loan, the amount that you are going to receive on that's based on 6 months of operating expenses. And when I spoke to some bankers here in town, they said, if you had some equipment loans that had a higher interest rate than the 3.75 that this loan is offering, that might make sense that you apply for it.
Yeah, I think that could be helpful for some people that have some, maybe even some credit card debt or higher rate loans. And if they've got the collateral to back that up, then that might be a better route to go. And probably the terms that they're going to put on that, as far as the length of payback, is going to be a little bit longer. So that might provide some relief. I also think on that one, Alan, isn't there like a suspended payment period, 6 months or so before you have to make any payments on that?
I think they both have suspended periods, yes.
Yeah, so it gives you a little bit of time, but if you go the payroll protection loan route, that's going to give you some cash to help pay this payroll and some of your other employee costs. The other nice thing about that is if you document all of it, you're going to be able to have that loan forgiven. And what I understand at this point is that forgiveness amount is not going to be included in income for this next year. So typically if a loan's forgiven, you're going to have to pick up the income on that. But what they're saying on this one is it would not be included in income.
All right, are we ready for questions?
Yep.
All right, I got, looks like 4 questions so far. The first one asks if PGH can provide all the documents to the banks.
It depends on what, so if they're applying for the economic injury disaster loan, that's going to be information that's uploaded directly to the SBA when you apply for the loan online. So I'm not sure exactly what they're going to want on that, but they're going to want a few forms filled out. And if you, on their website, they're going to tell us exactly what they want. As far as for these payroll loans, they want your 941s, W3, W2s. If we're doing your payroll, we've got all that. So we can supply that to the bank. I think it would be better if we can get all that information and just give it to them in one packet, so that you're not sending an application and then later you're sending your unemployment reports and later you're sending the 941s. You know, let's just get it all together and do it at one time. And that's going to help the process go a little more smoothly.
Yeah, you want to be doing these, you want to be filling out these applications too sooner than later, because there's supposedly limited funds.
Yeah, the stimulus package says that 350 billion will be used for this program. And with as many people that are talking about it and already trying to get things together, this is on a first come, first served basis. So when the money runs out, that's it.
All right. The next question is, do these loans include part-time employees as well?
Yes, you have to do the full-time equivalency calculation. So for example, in that February time period, if you had 2 employees that worked 20 hours a week, that would be considered one full-time equivalent. So in the February measurement period, if you had 10 full-time equivalent employees, you need to have 10 full-time equivalent employees during this loan period. And so you have to keep track of hours, and that's going to be one of the things you're going to have to report to the IRS or to the SBA for the loan forgiveness. Is there's going to be some kind of reporting where you're going to have to report the hours and calculate the full-time equivalents. Because let's say you had 10 full-time equivalents during the initial measurement period and you ended up with 8, the way it looks is you're going to have to pay back about 20% of that loan.
All right. The next question says that they just got off of a webinar with the bank earlier this morning, and they stated in that webinar that the EIDL and the PPP could be used in conjunction with each other. Is that true, and is that correct?
That is correct. However, the $10,000 grant that you get from the EIDL is going to reduce $10,000 off the credit or the loan forgiveness for the payroll protection. Is that right, Alan? That's what you got?
That's correct.
Yeah.
Okay, and then there's another question that says, is this one and the PPP mutually exclusive? Kind of on the same lines as that last question.
Can you repeat that to me, Tony?
I think this is similar to that last question. It's just asking, is this one, I assume they mean the EIDL and the PPP mutually exclusive?
Yeah, I think, you know, again, you can apply for both of them. The PPP, the payroll protection one, has to be used 75% for payroll. And one of the articles I read said that you can't use them for the same purposes. So if you're getting the EIDL loan too, you've got to separate out what the costs or what cost you're going to pay out of that loan.
Okay.
Yeah, the gray area is kind of how are they gonna monitor that, you know?
I'm sure there's going to have to be some accounting provided on that EIDL loan also. You know, on the payroll protection loan, they're going to want copies of payroll reports. They're going to want copies of whatever expenses that you're allocating to that. So you'll need to do some accounting on this. And again, this one's one where I think sooner the better to get on this one, because I know one of the banks we talked to said they had over 200 calls yesterday, and this is not a large bank, it's just a smaller local bank. So people are already getting on this, and nationwide it's going to be a big thing. And the banks are probably going to get overwhelmed with these applications. So I think if you can get your stuff together quickly, that's the route to go.
All right, the next question is, can we bring back part-time employees with the PPP loan or only full-time equivalent?
You can bring back part-time people and they will count towards those full-time equivalents. So if you bring back somebody for 20 hours a week, that's going to be a half of a FTE, and that'll count in your calculation. Now, a lot of these employees, even if you bring them back, they can still draw partial unemployment. So, you know, I think it's a good thing for the employees too. And a lot of people want to try and keep these people that they've had, and this is kind of a way to help do that.
One thing I might add to that is, you know, when you're talking about this forgivable loan, getting part of it forgiven is still better than nothing. And, you know, even the terms of this loan is 0.5%. So if you have to pay some back, you're still not out a lot of money.
Yeah. And this was something that came out, Alan, but was it your understanding that you can use an EIDL loan if, let's say that you got to pay some of the payroll protection loan back, you can then apply for an EIDL loan to refinance the payroll protection loan?
Yes, it's my understanding that that's possible.
Yeah. So to me, the economic injury disaster loan, the timing on that is not quite as critical maybe as the payroll protection loan. So
things are changing, you know, they just changed the payroll protection plan stuff 2 days ago. So
yeah. And that,
all right,
the applications for that can be submitted starting tomorrow. One other thing is this payroll protection loan also applies to self-employeds and partnerships, but the application for those is not supposed to start for another week. So we don't know what the application is. It going to be the same application? We're not sure at this point.
Okay, the next question is whether or not the paycheck protection loan, is that only for if you're shut down totally, or can you use it in other circumstances?
You can use the payroll protection loan if you're shut down totally, but you got to bring those employees back. So that's the, you know, can you get them back and can you meet that full-time equivalence test over the 8-week period?
you're going to have a lot harder time getting that loan forgiven if you don't have the employees to pay during that 8-week period.
Yeah. The other thing is you also can't, you just can't increase everybody's wages to meet that 75%.
Yeah, what I'm reading here, it says loan will be reduced also by any wages for an employee whose pay is now more than 25% higher than it was prior to the loan.
Yeah. So they're trying to keep people from just saying, okay, well, let's get the loan, and if we don't spend the 75%, we'll just raise everybody's pay to make sure we reach that. So you got to be a little careful of that.
All right, next question is, which application should you use?
Well, for the payroll protection loan, I would just contact your local bank that you're working with. They can email it to you and you can fill it out. Really, the payroll protection loan is just, I'm sorry, I thought I had one sitting here. It's mainly the business name, address, ID number, who the contact person is, and what's your average monthly payroll over the last year times 2.5. That computes the loan amount. And then there's a few questions to answer. So it's really very simple to fill out.
Okay. This is from the same person that had the bank webinar this morning. He said that they stated that subcontractors could be included in the payroll protection calculations. Is that correct?
I had read something about that, but I haven't seen anywhere in the applications or the instructions where you include those people at. So that I can't answer for sure.
Okay. And a follow-up, the question earlier where we asked whether the EIDL and the PPP were mutually exclusive, he really wanted to know if the ERC and the PPP were mutually exclusive or whether you could use both of those.
You can't use credits. You can't use those credits on the employee. They're not going to let you use them on both of them, I guess is what I'm saying.
Yeah, you can't use that employee retention credit and the payroll protection program.
Yeah, they're not going to let you get loan forgiven and also take that credit. So.
Okay, so somebody said they want to make sure that they're correct. If their total hours of payroll for a week is 350, do they divide that by 20 to determine their full-time equivalents?
I think you need to look at it. So if you're 40 hours a week and you've got 10 employees, let's say, so the full-time equivalency test then would be 400 hours. So if you've got less hours than that, you divide it by 40 and that's going to be your FTE.
And I think this is, again, in the case of part-time employees trying to figure out what their full-time equivalence is going to be in that.
Yeah.
Okay.
Yeah, because that'll be an important part of the calculation to make sure that you can get that that loan forgiveness. And you know what concerns me? I've had a couple people call and say, "Well, I'm only going to bring back half my people, but I want to get this loan." Well, you know, it's still not a bad deal probably because it's low interest rate and you can get people back to work, but you're not going to get 100% of that loan forgiven. Then if you can't meet the 75%, you know, that's going to cause some problems.
Okay. Are nonprofits eligible for all of these programs? And is there any difference based on having a nonprofit status?
So the nonprofits they're eligible for the economic injury disaster loans, and they actually get a little lower rate. They're at 2.75% on that. And as far as I understand, nonprofits are also eligible for the payroll protection program. So
Okay. And at least the last question that I have right now is how many hours can an employee work of their normal hours as a percentage and still earn partial unemployment?
that I don't know. That would be a question for the Kansas unemployment people. I actually tried to look at that for somebody today, and it just says if you're not working a full schedule, you would potentially qualify for partial unemployment benefits, but they had no formula. So I think on that one, if you just call the Kansas Department of Labor, that they can answer that question.
All right. We might give people just another few minutes if they got another question, but that's the end of the questions that I have entered so far. Oh, here's another one. Can PGH help us calculate our full-time equivalents? We have so many part-time employees, I'm a little confused.
Yeah, I think what we just need to do is get a list of the employees, what their hours are each week, and then we could calculate it off that. So yeah, that's not a problem.
And maybe how would you like people to contact us with questions, or if they need help, what's the best way to prioritize that, Dan?
Probably, I don't know, what do you think through that info email?
I think so. If you send an email to info@pgh-cpa.com, or if you forget the email address, it's on our website as well, which is www.pgh-cpa.com. We'll make sure it gets to the right place and that we get your question answered one way or the other.
Yeah, I think if we use that, that seems to, a lot of times our inboxes just get so overloaded with stuff during the day that we've got somebody that monitors that, and they kind of stay on top of us to get those questions answered. So that's probably, I would say that's probably the best way.
Okay. It looks like I don't have any more questions. Let us know how we can help, folks, and we'll do our best to get everything out there that we can.
Yeah, I hope that this hasn't started more questions than answers, but it's been a little confusing, and we just don't know everything that's happening. And you know, even today, the loan program is supposed to start tomorrow, and as of an hour or so ago, a lot of the banks still don't know what they're supposed to do. So, you know, a little bit of an issue, but I'm sure they'll work through it. But I think if this is something that's maybe going to benefit your business, that getting on top of it right now and getting in there is going to be key.
All right, I had two come in, so let's maybe do those real quick, and then we'll end it and get back to people offline if there's any more.
Yeah.
One says, if an employee is at home with kids since the schools are closed, would they still meet the payroll protection specs, or should they apply for unemployment?
You know, if they're able to work from home, I think that's great. We've got people working at home right now, so, and for some of the same reasons. But there's also that family leave credit too. If you're continuing to pay them like family leave, you can get a credit on that side of it. You know, if they're actually doing something though, they would certainly qualify under the payroll protection.
Okay. And then the last question is, how long after the application can we expect the loan?
That we don't know. That we don't know. We're going to be submitting a few tomorrow. I think it's just going to be how backed up the banks are. So again, I think the sooner you can get it in, the better. Make sure you got all the documentation that they require. And if you contact your local bank, this has to be through an SBA approved lender. So, you know, a lot of, if you deal with a credit union, they may not be participating in this program. So I would call your bank and ask them if they're participating and if they've got the guidelines on what documentation needs to be submitted. Fill out the application, which again is pretty short, and get your packet together and get it to them as soon as possible.
Okay. I think we've gone past the time that we'd allocated for this, and pretty much we're out of questions, but let us know how we can help, and we'll do our best. Thanks, everybody.
All right, thank you.
Thanks.